Hey, my name's James and welcome to my channel. Now, in this video, we're going to talk about Section 24. It's a killer for landlords who own properties in their personal name, but I've got a solution and a way that you can overcome the Section 24, and potentially this could be a very, very good one for you. So stick around until the end. So Section 24, it's been around a while, and Section 24 is basically an absolute unfair tax on landlords. And in fact, 30% of landlords in the last few years have left the market because of this tax. Now, that's not good for anyone. And so what we need to do as property investors is find ways to get around it. So what is Section 24? Well, Section 24 is what you will now, if you own property in your personal name, have to pay tax on the full income that you generate from your property business. Now, this might sound fair, but it's not. Let me explain. I have limited companies, right? And so if I have a limited company and my business turns over £100,000 a year, I don't pay tax on £100,000. I pay tax on what my profit is, right? Which is fair, because you have costs of running a business. You have staff, you have premises with rent, you have heating, you have business rates. You've got to buy the stock, or you've got to be able to provide the service. There are costs. So say, for example, in a business, you turned over £100,000 and you made £25,000 in profit, you'd pay tax on the £25,000. Does that make sense? You pay tax on the £25,000, not the £100,000, which is the right way, and that's how businesses run. Or if you're a big business like Starbucks or Apple or something like that, you don't pay any tax because you run it offshore, which is not fair to the small guys. However, landlords are getting hit hard, because if you're a landlord and you turned over £100,000 in rent, which isn't unrealistic for some landlords, you now have to pay tax on the £100,000. But you've got costs, haven't you? You still need to have laptops. You need to drive to your properties and petrol costs. You've got mortgages. You've got boilers that break. You've got all this stuff that you need to pay for. So why do you, as a landlord, have to pay tax on the £100,000 at the front end? Now, for some landlords, let's look at this as £1,000 rent, right? If you were on £1,000 rent, and it goes by what tax level you're on. So let's just say you're on 50% tax, which after everything is roughly what a landlord would be on, right? So if you're on 50% tax, then you're going to pay £500 tax on that rent. Now, you've got a mortgage on this. So what if your mortgage is 500 quid, which is very realistic? £500 mortgage, you now make zero, like actually nothing. And this is happening to thousands of landlords, which is why they're leaving. Now, you actually could be worse off, because you've got to pay for insurance, you've got to pay for estate agents, you've got to pay for maintenance of the property if the boiler breaks. There's all these things that you've got to pay for out of that £1,000. And so the government's taxing you on the front end, getting huge uplift in their tax revenues, and that's killing landlords. And this is called Section 24. And this is why rents are going through the roof, because 30% of landlords have gone. That means there is so few rental properties. Demand is so high that the asking prices are going up. And in fact, it's not necessarily the landlords that are putting it up. I own a flat, which you can see on this channel, which is the first property I bought. You can walk there in a minute from this office. It's down near Dorking Halls. And that property, we last put it on for 900, and there was a bidding war, and people offered 1,000. They said, look, I'll give you 1,000, give it to me. And that's happening all over the place because there isn't enough properties and people are bidding the prices up. And so that's not good for them either. That also makes affordability bad, because look, yeah, you can get a little bit more rent sometimes, but do you really want a tenant that's really stretched, because they're more likely to not be able to pay you in the future? So how can you beat this Section 24? Well, I've been doing some research, and one of the best ways to beat this is by turning that property, rather than in a like a normal rental property, turning it into serviced accommodation. SA, right? Serviced accommodation. That means that you rent it out on booking.com, on hotels.com, on Airbnb, and all these other places. You do it as a short-term holiday let property. If you do that, this is where it gets really good. Now, so there are rules on this. So the property has to be available for at least 210 days out of the year, right? So it needs to be mostly full-time as an Airbnb or whatever you choose to run it as, right? So it has to be available for at least 210 days. But not only does it have to be available, you actually have to rent it. So you have to get tenants in for at least half of that time, right? So it needs to be affordable, it needs to be nice. You need to do whatever you can to actually get the tenants in there. So that's really, really important. Now, here's where this is really good, because the income that you generate from this isn't through a short-term, assured short-hold tenancy. It's now deemed as like a business income, so you can now write off your costs again, back to where it was. So you can now, at this time, you're able to say, right, it's cost me this money to market it. I've got to pay these transaction fees. I've got to do maintenance. I've got cleaners, all of the things that you make as a cost in that are tax deductible. And then you're going to pay the tax that you owe on the profit at the end, which is going to be the smaller number. This is an absolute game changer. Now, this is where this gets even better. You see, why didn't landlords that own a property that have Section 24 problems sell it to a company that they own where you don't have these problems? Well, the problem is capital gains. And so if you sell your property, you've got to pay tax on the gains of that, which is 28%, which for a lot of landlords, maybe they bought 20 years ago, could be thousands, tens of thousands, even if you're a London landlord, could be hundreds of thousands of pounds just to sell your property back to yourself. Doesn't really make sense. Now, if you run this property, you need to run this by your accountant and check out the times and all of this stuff. But if you run it as a serviced accommodation business and then you sell it, you get the option to sell it, and the tax that you make as the profit now is only 10%, down from 28%. Now you can sell it to yourself in a limited company, right? And then go back to normal buy-to-let. Or if it's running really well as a service accommodation, this could be an absolute game changer for me. I'm just checking my notes, see if there's anything else that I need to give you guys on this. But this is a way to beat Section 24 at its own game. Turn it into a short let. You know, short lets are way more lucrative anyway, because I've got property where you could rent it out for £600 for a month, but you could get £100 per day. If you've got it rented out for 20 days, you're going to get £2,000 in a month rather than 600. Now, out of that, you're then going to have to pay the gas, electric, telly, license, all of these things, but it's significantly cheaper. Or you'll make significantly more money. Plus, on the profit that you do make, so let's just say the profit comes out at £1,000 here, you're only going to pay tax on the £1,000, not the £2,000. That's a big win for property investors. So this is how you can beat Section 24. This one's really exciting as well. If you run it as a short-term let, and you can prove that you've done that for a period of time, then you can sell it, and the tax that you pay is 10%, which might mean it's worth doing to move it into that limited company, because when it's in the limited company, you can pass it on to your kids, you can sell it easier. It's a way stronger way to own that property rather than earning in your personal name. So that's what I'm thinking that I'm going to be looking at doing myself. I'd love to know what you think. Do like this video, guys, if you didn't earlier. Do subscribe as well. Hit the bell. Comment below. Do you think this is a good idea? I think it's amazing. But do make sure you get financial advice before you jump into any of this. Speak to your accountant, someone that really knows these rules, because you want to make sure that everything is hunky-dory. That's it from me. I'm James Nicholson. Check out all the other content on my channel, including this video right here.